Good afternoon, everyone. Futures Barizio here. It is almost 2 p.m. on Wednesday, July the 3rd. Hope everybody's having a great week so far and a good day today. Um, First of all, as always, before we get started, make sure you smash that like button, subscribe to the channel if you're just finding it for the first time. And of course, leave any comments, questions below. And like I said, subscribe to the channel. Really appreciate it. And hopefully the free content that I give you brings some value to you. Like I said, many times I'll never be selling anything on this channel, so you never have to worry about that. So, as I mentioned on Monday, this is a holiday week in the U.S. for those that are not here. Tomorrow is Independence Day, and then Friday the markets will be open. The futures market will be open, but I don't expect to see much movement at all during the North American session. There might be some volatility early on during the European session, London session, on these markets that are open throughout the night. But once it gets to be, 8, 9 a.m. New York time on Friday, I expect things to quiet down. So even though, again, the markets will be open, I don't anticipate a lot of movement. So really for the week, today was probably the last, good day for trading this week. Certainly tomorrow will not be. And then Friday, like I said, I expect the volatility to be pretty light. So we'll see. Okay, so the purpose of this video, guys, is, again, I've been talking about using Heiken Ashi Smooth candles and setups, basically using this free indicator, which helps smooth out price action. I'm not going to rehash all that again. I have several videos recently kind of explaining the difference in what Heiken Ashi Smooth is, so I'm not going to get into that. So what I want to do today is just talk about, let me just take all this off the charts, is just talk about kind of a simple mechanical strategy that you can use to take advantage of that, just using one other indicator, which you can see on the screen. And again, I'll say up front that you can use this on any time frame. You can use it on the scalping, day trading, swing trading, whatever. Just understand, as always, the lower you go in time frame, the more unreliable the signals become, because the indicator is taking a lot more noise on the short time frames into account than you're going to get on the larger time frame. So my preferred time frames for doing this is the 10 to 15 minutes for analysis, with a quick peek at the higher time frames, the 1 hour, maybe the 4 hour. But again, these are futures markets. I don't know if I really like to go that high, and I don't plan on holding my trades that long. So somewhere around the 30-minute to the 1 hour, possibly a quick peek at the 4 hour, just to see if there's any major level you're running into. And then again, just to confirm trend, and then to enter on the 10 to 15 minute, possibly lower down to the 5-minute. But again, you're going to get more false entries that way. So you do have to be careful. The lower you drop down, 5-minute, 1 minute, you're definitely going to get more entry signals, but it doesn't mean they're viable. So the better thing is to take it on a slightly higher time frame, take advantage of those slightly larger time frames where your entries are going to help you stay in the move longer. But if you miss it, because some of these moves unfortunately happen too early for me, these markets trade almost 24 hours a day, some of them, and they certainly trade during overnight hours. And so you do get a lot of volatility in entries that start, during the European session, 3, 4, 5 o'clock in the morning, my time, and, I'm not up for those. And so there's many times I open the chart and I'm like, wow, it's already moved. And so you kind of have to just sit and wait for the North American session, wait for a pullback. And, in those circumstances, if you've got a decent trend and you're not running into any major level on the chart where prices could reverse off of, then certainly you can go to a shorter time frame, maybe a 5-minute, and look for an entry, continuation entry there. Okay, but again, this is a trend trading, trend following system, and it's pretty mechanical. And I avoid sideways markets. I just don't trade sideways markets. So if I can identify a sideways market on, say, a 1 hour time frame, then I'm just going to put that one aside and just wait. And I'll show you where we kind of had that right up until present on a couple of assets here. So let's just jump right into it. Okay, so the indicator on the bottom is just a 2-line MACD. So it's a regular MACD with the default setting 12.26.9. Okay, so there's nothing magic. It's just a MACD. But unlike the MACD that is in MetaTrader, which is the MACD and the signal line, but the MACD shows as a histogram, and the signal line is the only one that's a line. I don't like that view. I think it's hard to read it. So this is a free custom indicator that I found, and I've made videos on this in the past. It's a 2-line MACD. Again, it's a free indicator. You do not need to pay for it. If you need help finding it, let me know. But if you just Google 2-line MACD from MetaTrader, I'm sure you'll find a couple of sites where you can download it. Don't pay for it. It's a free indicator. And this is what it looks like. And they said there's no histogram. I'm not using a 0 level here, so I don't have any level drawn through the middle. It's just the 2 lines. And again, I just have the default settings. And again, this is the MACD line. And this is the red line is the signal line. Okay? So basically how this works is you're going to first identify the trend. So we're on soybean oil. Hold on one second, guys. I had my air conditioner running in the background. I apologize. I know it's quite noisy. So I'm just going to turn it off while I make this video. It's not really that warm today anyways. So this is soybean oil. And I'm just going to use this because this has been trending very, very nicely. So first, just go out to the 1 hour chart. And you can see clearly this is in a very, very powerful uptrend. And like I said, that's good enough for me. I will go out to the 4 hour. And you can see on soybean oil, there is a level potentially right here, and if not right here, that price could be reactive off of. So we are nearing that area, but we're not there yet. And so obviously, as price went up, this area right in here may have been one area that I would have first, had a little caution around. But this is what I call just retail, this kind of middle of the road crap. Even though there can be a reaction off here, when you see these really steep drops where price goes, this is a 4 hour chart. Look how deep this drop was. That is really the key area where these massive bear candles set up. All of this in here is just kind of retail trap. So even though you have to be a little cautious when price comes up to these areas, as you can see on the Heiken Ashi candles, especially on this time frame, it didn't even look back. I mean, these candles stayed blue the whole time, okay? But when it comes up to this area, either maybe at the top of this candle right here, I zoom in a little bit. I gotta shut off the scroll. Either like right here or up at this, that's these 2 purple lines I just dropped on here. This is an area that I would pay attention to because this is a higher time frame. Not saying again it won't just blow right through here, but if you were considering long positions, I'd be very cautious of these areas. Okay? So that's the only reason why I'd go to the 4 hours, just to make sure I'm not running into a major area, which this is up here. Okay, but obviously this whole way up, especially after this point, once this uptrend was confirmed beyond this little low that was put in right here, and certainly once it cleared this area, we had all this room to run. Okay, so that's the 4 hour. So again, 1 hour clearly in an uptrend. Let's scroll back over to the right. All right. So now that we've confirmed that, we're not really looking at the MACD on this time frame. So now we're going to drill down to a 10 to 15 minute chart. And if you just look here, we're only considering long positions. Now, again, guys, there's certain times of day here, but we're just going to take that off the table because obviously some of these entries happen in the middle of the night when I would not be catching them. But just for the purpose of this methodology, I'm going to just kind of ignore that. As I've said in previous video, these yellow lines represent 7 a.m. New York time. It's just an arbitrary place on the chart that I added just so when I back test, I can get a decent idea about my trading session. And usually 6, 7 a.m. is about the earliest I look at the charts, unless I happen to wake up really early. But I try not to, just because, it's just too early for me. So let's just ignore the times and just look at the signals. So knowing that we're in an uptrend, and if we go back to the 4 hour, let's drop a line right here. We'll change the color of this vertical line. Hold on, guys. I gotta do my other screen here and change the color. Whatever. Just pick something. We'll just pick red. Okay. So knowing that, we go back to, like, say, a 15-minute chart to start. Here's the beginning of that uptrend. So you can see basically what you're looking for here is the white line crossing over the red line, okay? And that's going to be our signal, because we're only looking for longs and we're ignoring all these down moves. And you say, well, how long do we ignore the down moves? Well, we look at market structure levels. So just looking back at the 1 hour chart, I would say as long as price holds over this level currently, I would not be looking for any shorts, okay? And this looks like kind of the last pause the market took, just arbitrarily looking. So let's go back to the 15, and we'll get rid of this line. And you can see why you have to look at a higher time frame for that, because you're going to see all of these little structure areas, and some of these could be violated. It doesn't mean the uptrend is invalidated. But again, we're just looking at continuation entries here. So we have one right here. We technically have one right here, okay? And we had another one here, and I'm just looking at all the places where the white line crosses through. We actually have one right here, a little harder to see. We have another one right here. We have another one right here. We have one here. I'm literally pointing out every one, even if they're very minor. Here, here, okay? And if you look at every one I just told you, every one of those would have been successful trades, assuming that you had your stop in a proper place to, give it a little breathing room for retracements and pullbacks. But the Heiken Ashi candles can really help you identify those areas too, kind of as a second confirmation. And if you look at those areas, we also get blue Heiken Ashi candles at those areas too. And, a lot of them with flat bottoms, indicating nice upward price momentum. Okay? So it's a very mechanical system. Now, 10 to 15 minute chart, again, the lower you go, the more chance you're going to get bad signals. But you could probably do this on a 10 minute and probably get just about the same type of entries. You could get some false signals, some signals where maybe price doesn't really hold too long. Like, I don't know, let's see, like right here, this area, or we get a signal. Let me just mark this, and then we'll go back to the 15. It's probably okay, but let's just look at the 15 on this one. Yeah, so on the 15 here, the signal was actually back here. You would have already hopefully been in this trade. But if you missed it, there was an opportunity to go long right here. Okay, now you would have had to withstand a little bit of a pullback here, but ultimately, and some chopping, but ultimately the price did go higher. So that's kind of why I like the 15. Now, you can also go all the way down to a 5-minute chart, too. Because this uptrend, now, guys, listen, this uptrend is so strong that it's like shooting fish in a barrel. It's not always going to be this easy because, if the trend is not real super clear and strong, you could get a lot of false signals. Every system is going to have losing trades. I'm not in any way telling you that this is a foolproof method, but it is pretty good. But you can see on the 5-minute, if we look at areas where where we get signals here, I'm just putting the cursor over those areas. These would have been pretty good too. I mean, sometimes you would again have to deal with a little bit of drawdown or consolidation, but overall, these are all really good signals too. So I'm not saying you can't use the 5-minute, especially if you miss a good 15-minute entry. Then you could go down to a 5-minute, wait for a pullback entry, and then grab it. So you're not, missing out. Not, you don't want to have FOMO, but if you follow the rules, it's pretty good. All right. So that's, how mechanical it is. Identify the larger trend on the 1 to 4 hour chart. I like to use the 1 hour, maybe the 30-minute. 1 hour is good. Maybe take a peek at the 4-hour chart just so you know you're not running into any huge levels above or below that you can't see on the shorter time frame, because you don't want to like be buying into, we looked at this 4-hour. If price comes up here and slams into this area and then reverses, I'm not saying it will, but if it does and you're blindly buying into this zone, like between these purple lines, and you buy into here and then, the market peaks through here and then quickly reverses down, you get caught in a losing trade because you didn't know what was going on the higher time frame. Now, if it blows through that area, then boy, then the sky's the limit, right? But you just want to have an eye of what's going on those shorter time frames. And the Heiken Ashi candles again give you excellent, quick, smooth visual view of what's going on in terms of the price action. Allows you to kind of hold those trades through some of the down turns and some of the corrective moves. It allows you to see the structure levels, so you know like kind of where you want to get in or where you want to get out, and it's a good confirmation. And again, this is the Heiken Ashi Smooth that's here, and this is set to a period of 5, linear weighted 5 period Heiken Ashi Smooth. Again, you don't have to use 5. You could use 2, 3, 4, 5, maybe up to 7. The 5 I found was pretty good. If you go down to a 2, it looks more like a regular Heiken Ashi chart, which I still think is a little noisy. So 3 to 5 is kind of the sweet spot for me. So that's pretty much the system. Identify the longer trends. It's a very simple mechanical system. Now, guys, there's, like anything else, there's always a little bit of intuition and kind of gut feeling you have to use when you're entering and exiting trades. I can't teach you that. That just comes with experience. But in terms of just mechanical system, this is pretty good. Okay? And it allows you to just follow trends. So if we look at potential range trading, so now this is the Dow. Now, again, I know someone's going to put a comment and say, well, you could trade it on a shorter time frame. Yes, you could. I go out to the 1-hour chart here. I see a sideways market, and you can see this rectangle I've drawn around this price action that goes back. I drew it from the time it kind of made this low down here. This goes back to last week, to June 26th. So that was last Wednesday. So we've essentially been moving inside this range since last Wednesday, particularly since Friday, right here, between these ranges. You can see we keep touching the upper and lower end of these ranges. Touched it, at the beginning of the session yesterday. Today we touched it right at the top end, and now it looks like it's coming down again. To me, this is a sideways market. I'm not interested, so I'm not trading this. I completely ignore this one until it breaks out. Gold, on the other hand, was kind of doing the same thing. We go to the 1-hour chart of gold. You can see this consolidation range we had right here. All right, just something like that. And we broke out of that today, or during the overnight session, and then certainly today. So this looks like it's going higher. Now there is, like I told you, major levels. There is a level sitting, up here. We have to be cognizant about it, that it's about to run into. And then if it gets through there, there's another one pretty far away. But we are running up against this potential area. So we'll have to see what gold does. I think this probably will go right through here, but you have to at least be aware of these areas, because price will have a reaction off these zones. There's no doubt. It's just that, is it just a reaction or will it be a reversal? So that's why I said just be aware of the larger areas. And again, when you see really impulsive movement coming off an area like this, like when you see these big red candles coming down, those areas that should catch your attention, where there might be some kind of imbalance up here that the market might have to go back and look at again. So and there could still be a lot of sell orders sitting up here. I don't know. We'll see. So just be aware of those. But so gold is broken out. So putting this area aside, then this is an area coming into today where you could have been looking for longs. I actually did take one, but I'm out of it now. And again, if you go to the 15, and this would have been your entry today, early in the New York session, right here at this candle, we had a cross up, and there was your signal, and then you could have gotten out, which is I think where I got out. As soon as it broke this level, I was out of this. And again, it's just kind of drifting lower on the day. All right, and let's see. I think we have some downtrend. So yeah, so this is natural gas, which has been trending down, and we'll just take a look at this one. This is just the opposite. This is just down, and again, out to the 4-hour. We do see that there is a level off to the left here. We do have this area right here. The price kind of has gotten to now, and we see we're running into some consolidation. If we turn on the candlesticks, you see we pretty much pegged that area. So this is an area to keep an eye on. You can see prices having a hard time going lower. It tried today, and it's just kind of chopping around. So that's why, I tell you, just be aware of what's going on with any major levels on the higher time frame, especially on like a 4-hour. And if you see that, just to be aware of it. Doesn't mean price is going to reverse off of there, but it will have a reaction, and it will have trouble getting through that area. And if the sellers really are in charge, you'll see probably a bounce, and then eventually they'll take over and push it through, and that's fine. But just be aware of that, as you don't want to be selling into a major support area. All right. But either way on this, if we go back to the 15 or the 10, you can again say, okay, we're only looking for shorts here. So there was an entry here, just what we see on the chart. There was an entry back here. Like I said, right here. Let's see, red crossing the... There actually was one right here. And this actually would have worked out, even though it doesn't look great. Here's one right here. Again, very, very minor. But it would have, if you got in right here, it kind of meandered. But it did end up making new lows. And right here, right here. And we ignore all these long signals. Another short here. Another short here. Okay, here, this one would have been a loser, or, well, maybe not a loser, but drawdown, right? There's one right here, all right? Right here where we see price went down, you would have entered right here, and then price quickly reversed. Now, it doesn't mean it would have been a loser. It depends where you had your stop loss, right? If you put your stop over the last swing high right here, then yes, you would have been stopped out of this. Wouldn't have been a big loss. I mean, not from a point. I mean, obviously you have to use good risk management, but but if you put your stop above a previous swing, like over here, you might have been okay with that. Okay. And so that's an area. And then we had another signal just in the last couple of hours right here, and this is still going down. Now again, we do have this area down here, so we'll be curious to see what happens when price runs down. You can see this purple line right below here, which represents that major area. We might just come down and tag that purple line, break through this low, and then have a reaction. But again, I wouldn't be selling this right now into this area, just because of that. But again, the operative key point here is that it's a very reliable system. But again, you have to know, again, what is the higher time frame doing around the 1 hour. Peak at the 1 to 4 hour. Make sure you're not running into a major level where price really was super reactive in the past, and either like big bullish or big bearish candles coming off a level, because those are more than likely going to be areas where there's a lot of orders sitting, and there probably will be some sort of reaction. Doesn't mean price will reverse at those points, just means there'll be a reaction, and I would probably avoid opening new positions in those areas until it kind of clears out one way or another. Okay? And avoid sideways markets, in my opinion, at least if you're going to trade it on these time frames. And you can easily see that sideways action on the 1 hour chart. Now, unfortunately, sideways markets take time to play out, right? So if we go back to the Dow, well, it's easy to see this is in a sideways market now, but when it first starts happening, you don't know. Made this first low here, you're like, okay, well, whatever, maybe it's going higher, maybe it's going lower, and then we chop around, then we come up, and it's really from this point, right? Bounce, hit the top, hit the bottom, hit the top. There's your range starting, right? So really from right in here, which is last Friday, that's kind of when the range started. I just drew this back only because this low back here is equal. But at this point, you probably didn't know you were entering into a range. It's obvious in hindsight. So unfortunately, sometimes you take a couple of losses while you start to figure out something's entering into a range, and you just have to figure that out the hard way sometimes, because you don't have a crystal ball to know something's going to start moving sideways. But now it's very obvious, and I just keep extending this rectangle to the right here until I see a clear breakout like we had in gold today. So, and then after that, that'll be it for that range. So again, guys, that's pretty much it. Mechanical, using the MACD, happens to be the MACD 2 line on my chart. Default settings 12.26.9. Identify the trend on, say, the 30-minute to 1 hour. Look at the higher time frame just to make sure you're not running into any major area you don't want to sell or buy into. And then go down to your shorter time frames. 10 to 15 minute chart ideally, so you can catch the longer moves. But if you miss those, as long as you feel the trend is still strong and it's not violating any structure levels on the shorter time frame, you could go down to a 5 minute and catch those intermediate entries on the short time frame. If you happen to miss one of the longer ones because you weren't watching at that time. All right, but to be on the safe side, the 10 to 15 minute entries are better. You still should get a fair number of those in any type of trending market. You should still get at least, a couple of those a week, if not more, on any given asset, as long as it's trending strong. So you should still have time to be able to do that. But again, if you don't, if those entries happen when you're not at the chart, you certainly could use the shorter time frame. Just understand there's more risk of a false entry, and you just have to watch key levels more closely on those short time frames to avoid, like I said, a false, false entry. So don't have FOMO and end up costing you money. Just be patient, and you'll find your entries. So I hope that's it, guys. It allows you to use the Heiken Ashi Smooth, which I really love. It allows you to otherwise keep the chart clean, and use price action, use structure levels to know when trends could be reversing. And just uses one simple, common, long time indicator in the MACD. I'm not using it for divergence. I'm just using it for signal crossing MACD line and just for confirmation. And then I'll use the Heiken Ashi candle that lines up with to make sure that's the same color as it's in the direction I want to enter. If it gives me like a flat bottom or a flat top, flat bottom for an up signal, a flat top for a down signal on the Heiken Ashi candle, even better. So, all right, guys, I'm going to leave it there. That's enough. Go ahead and back test it. Questions, comments, leave them down below. If you need any help with it, or again, finding this indicator, if you don't want to use the MetaTrader MACD, which you can, I just don't find it very useful. If you're using other trading platforms, I know TradingView has a 2-line MACD as a standard indicator. I think that one also has a histogram. I would just turn off the histogram. You don't need it. But if you have, like I said, newer trading platforms, most of those probably use a 2-line MACD. But if you're a MetaTrader user, the standard indicator in MetaTrader is not. And so this is a custom indicator. But it's free, and it works the exact same way. And I didn't change any of the settings. It's just a better visual. So, all right, guys, I'm going to leave it there. There will be no video tomorrow. Probably not Friday either. I actually have a lot of things to do Friday. I'm heading out of town Saturday morning for until the middle of next week. So I probably definitely will not be making any video tomorrow, but Friday probably not either. So if I don't talk to you, have a great rest of the week. Happy Independence Day if you're in the USA, and a great weekend. And again, smash that like button on the way out, and hope you have a great rest of your day, and I'll talk to you soon.